Hi traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. Okay, now if you are tired of using the same old moving averages that lag behind price, it is time to level up your trading with the logarithmic moving average. Okay, so basically in this video I'm just going to be quickly breaking down what the logarithmic moving average is, how it compares to other moving averages, the best settings and time frames, and how to apply it to your trading strategy. All right, now make sure to hit that like button and subscribe to the channel if you want more high level trading content. Now let's just get started. So what exactly is the logarithmic moving average? Now the LMA, I am just going to add it to the chart right now. Let's just search for it. The logarithmic moving average. Okay, here we go. We have the logarithmic moving average. So basically this is a trend following indicator, right? As we can see, it is a trend following indicator that smooths out price action while adapting to market volatility more efficiently than traditional moving averages like the simple moving average and the exponential moving average. Okay, so what makes the LMA, or the logarithmic moving average, more unique? What makes it unique? So instead of calculating the average price using a linear scale, the LMA applies a logarithmic function which reduces lag and gives more emphasis to recent price changes without overreacting to short-term fluctuations. Now, this makes it particularly useful in volatile markets where standard moving averages can fail to adapt quickly enough to price movements. Okay, now let's just quickly compare the LMA to the SMA and EMA. All right, so you can see why it is different. Okay, now as for the SMA, right, now let's just, this is period 14, so I'm just going to add a simple moving average. Okay, sorry, I'm going to add it in a different way. I want to add a simple moving average with the same period, right? So I'm going to change this to 14 so we can see the difference, right? So we have this, in fact, let me just change the color, make it much more different, right? So we can see that the red colored moving average is the SMA, while the blue colored moving average is the LMA. So basically the simple moving average is the most basic moving average, and it calculates the average price over a fixed period. It's slow to react and it lags behind price action. Okay, now in the case of the EMA, let's just add the EMA now. The moving average exponential, I'm going to just change this to 14, so we're going to be having the same, same period, right? So now, as for the exponential moving average, it gives more weight to recent price action, right? Making it more responsive, but it can be too sensitive in choppy markets. Okay, when it comes to choppy markets, the EMA can be too sensitive. All right, so that can lead to false signals. But as for the LMA, the logarithmic moving average, instead of weighting prices linearly, it applies a logarithmic function that allows it to adapt dynamically to price trends. So this means it reacts smoothly to changes without excessive lag or whipsaws. All right, so if you want an indicator that is more adaptable than the SMA, but less whipsaw prone than the EMA, then the LMA is a great alternative. All right. Now, the best LMA settings depend on your trading style, actually. All right. The best LMA settings depends on your trading style. So if you are a day trader, right, for day trading, for short-term trading, you might want to use the 10 period. This length, you can just come change the length to 10, or you can change it to 20, right? Depending on your trading style. You can use the 10 to 20 period LMA on the 5-minute chart or the 15-minute chart for quick trend shifts, okay? Then for swing trading, which is midterm trading, you might want to use the 50 period LMA. All right, so you're just going to change this to 50, right? You can use the 50 period LMA for swing trading on the 1-hour chart or 4-hour chart. Okay, it helps to track dominant trends. All right, it helps to track dominant trends. Now, for position trading or long-term trading, you can use the 100 to 200 periods LMA, right? So you can actually decide to use 100 or you can use 200. All right, that's for position trading. You can use 100 or you can use the 200-day LMA. All right. Now, you're going to be using this on the daily chart or the weekly chart. All right. You're going to be using this on the daily chart or the weekly chart. Okay. It filters out noise and focuses on major trends. Okay. But you might want to combine the LMA with a momentum indicator just to be, on the safer side for trend confirmations, right? For confirming your signals, basically. So you can actually use any momentum indicator of your choice, whether you want to use the RSI or the MACD or any other momentum oscillator of your choice. All right. Now, how do you exactly use the LMA in a trading strategy? So here are 3 powerful ways. The first is identifying trends. All right. So when the price stays above the LMA, it's an uptrend. When the price stays below the LMA, it's a downtrend. It's as easy as that. Right. Secondly, you can use it for dynamic support and resistance. The LMA can act as dynamic support level. That's in an uptrend. Right. You can see when you have an uptrend, the LMA serves as dynamic support and resistance level. Let me just bring this period back down. So it serves as dynamic support and resistance level in an uptrend, as you can see. Then in a downtrend, it actually serves as dynamic. Sorry, in an uptrend, it serves as a dynamic support. In a downtrend, it serves as a dynamic resistance. All right. Now you can also use this, for crossover strategy, right? When you want to use the crossover strategy, it means that you would have to add uh another logarithmic moving average. You would have to add another logarithmic moving average with another period. All right. So I'm just going to be adding another logarithmic moving average with a smaller period, since I already added the one with the 50 period. As you can see, this was the 50 period. So I'm just going to set this one to be 20. All right. I'm going to set this to be 20 period. Okay. So for the crossover strategy, whenever the shorter term LMA crosses above the longer term, in this case, the 20 LMA crossing above the 50 LMA, you have a buy signal. And whenever you have the 20 LMA, or rather the shorter term moving average cross below the longer term, you have a sell signal. Okay, so this helps traders to stay on the right side of the market and avoid false signals from standard moving averages. Now, here are some bonus tips to maximize your results with the logarithmic moving average. All right. It's important that you combine the LMA with volume indicators, okay, because high volume during an LMA breakout can confirm strong momentum. And also use LMA on multiple time frames, okay. Checking the LMA across different time frames can filter out weak signals and improve trade accuracy. All right. Finally, avoid using LMA alone, okay. Always combine it with other technical indicators to increase reliability and minimize false signals. All right, and that is how you can use the logarithmic moving average to improve your trading. Let me know in the comments, have you used the LMA before? What settings do you prefer? If you've got value from this video, make sure to smash that like button and subscribe so you don't miss out on more powerful trading strategies. In the meantime, thank you for watching, and I'll see you in the next video.